Good morning, everybody. It's Brian Caprice from Keep Trading Simple, and this is your Tuesday Trade Talk. So welcome back, everybody. I know some of you came in from the group from yesterday, and maybe some of you are new today. And if you are new, welcome to the group, and it's good seeing you guys again. So definitely restarted the PC today. Make sure that we don't have any issues. Again, I apologize for that yesterday, but so let's roll right into things today. Make sure we can get enough stuff covered. I know there's some movement early this morning with the BOJ speaking, but again, we have some things set up this morning, and I want to make sure that we are ready for it. So for those of you, again, that don't know me, I'm the president and CEO of Keep Trading Simple, and my job is to kind of remove a lot of the distractions that people see in the markets. A lot of people get frustrated when they overcomplicate things, and for me, that's kind of where my trading style comes from. And I'm telling you this just so you understand when I'm looking at a chart, what is it that I'm looking for and where I'm coming up with my opinions from is based off a lot of the philosophies I've seen. And I've been trading since about 2001 time period. So I've seen a lot of ups and downs, sideways, and I used to complicate things a lot back then. And again, so that's where a lot of my chart analysis is going to come from. I've created a number of different programs. One thing I always like to point out, guys, is I do not believe in sitting in front of a computer for 16 hours a day trying to find setups. I am a big believer in using technology, doing other things, enjoying life, and when it's time to trade, be alerted to come back, place your trades, and then go about the rest of your day. So I've created a number of different systems and strategies that do take advantage of that. They are, obviously Nadex based, but again, it's for people that have full-time jobs. If you guys are full-time jobbing it today and you're going to work later on, again, I'm right there. I understand exactly, what you're going through. So understand that's where my chart analysis is coming from. I have a lot of if this, then that type kind of philosophies in what I'm doing. I was on the advisory side of things. I work for one of the big three banks. Realized very fast that they know absolutely nothing about charts, trading, nothing. Was not the industry that I thought it actually was, so I left and came out and have been teaching people since. Spent about 6 years traveling around. I've stopped traveling now. I stay at home and take care of the kids now and help teach people from home. But I do what I do. Okay, I got 2 boys and a little baby, and the baby's running around everywhere, so she takes up a lot of my time. Hence another reason why I'm not sitting in front of a computer for 16 hours a day. But it's important to understand that it is possible to do these things and not be married to a computer. So I just want to make sure you guys understand that. Now, before I jump into any charts or give any opinions and everything, I do want to make sure that we cover the Nadex risk disclaimer before we start. Now, trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Past performance is not necessarily indicative of future results. Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Trading can be volatile, and investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures that investors cannot lose more than the cost to enter the transaction. Nadex is subject to U.S. regulatory oversight by the CFTC. So with that being said, let's jump into it. For those of you that are here, I do my top 3 of the week. As you can see, they're all late, although number 3 is USD consumer confidence, which is at 10 a.m. Eastern time today. Today's actually yesterday there really wasn't a whole lot. We had some flash surveys very, very early in the morning, and then the U.S. one mid-afternoon. Today is another day that is quite, I'd say, for lack of a better word, quite anemic on news. Let me drag in another window real fast for you guys, okay? One of the things that I use every single day, and if you've ever watched any of my presentations, you'll know this is, doesn't matter which news source I'm pulling from, I always use this scanner to kind of give me an idea of really where things have gone and what's moving and what's not moving right now. Looking at the news, again, we already had some early German client data. And again, it was better than expected, hence why you've seen probably a little bit of a pop in the euro dollar. But you can see, obviously, we had, the Australian, governor speak early. Because it is not something that the news can factor in, we haven't seen a huge push off of it, although you'll see that there's kind of conflicting data over the last couple of hours versus the last 24. So what we do have later on today is this consumer confidence number at 10 a.m. It is considered a high impact news release, and again, just getting a little bit of history on this one, you can see it's not something that you can see what the history is. Okay, and the reason why is because they want money for it. Okay, so it's one of those things that if any of you did have the news manual that I sent out, I do have U.S. consumer confidence in there. It's something that I track personally, but this is a number that, again, talks about Are people buying? Are they selling? If you are confident in the market, you're okay, spending money and splurging. If you're not confident in the overall market and the economy, you tend not to spend as much money. Okay. When you don't spend money, companies don't make money. Retail sales and things like that are down. It slows the GDP. So it's kind of, you guys can see, it's kind of a chicken, versus the egg type scenario. Okay. So it's an important number to look for because it shows what the overall public is feeling. All right. Now, back to the analysis over the last 24 hours. I am one of the, and I would say it's not really an indicator. It's kind of more of a reading. They are different. ATR is one of the things that I use quite often. And I use that because it tells me what should a currency pair be using. Again, what should it be doing every single day? Okay. It doesn't just work for currencies. It works for indices. It works for commodities. It really doesn't matter what you're trading. But an ATR is going to tell you what the true average range is for the day. Okay. Looking across at this right now, I can see that the only thing that really looks like it has a lot of movement is probably the pound yen. Okay. Now, 54 pips over here is the largest number up here, but it's also the pair that's supposed to move the most. It's not really doing a whole lot. Okay. Its ATR is about double what it actually is right now. In 24 hours, it should be moving around 100 to, about 120. At 56, it means that we had a pretty flat day yesterday. And looking really across the board, at least there's not a lot of single digits, although the euro dollar's close. But whenever you see something on this kind of lower end, maybe half or a third, you know that yesterday was a very slow day. Looking at today, we have one number that really makes a huge difference. The consumer confidence number around 10 is important because, again, it will affect the dollar. Okay, it'll affect our trading partners, but more importantly, okay, it will affect the indices, and here's why. At 10 or 10:30 in the morning, those are the two most common times for a reversal in the overall markets, in the indices, right? That consumer confidence, not only do we have the kind of the mutual funds and all that stuff has already kind of occurred early morning, but now all of a sudden we have kind of the big traders, the one bit of news that hits at 10 or at 10:30 has the ability to swing the market completely in the opposite direction. So definitely something to watch out for. Again, with nothing after that and only consumer confidence, that could be the story of the afternoon and really affect these trends. So don't expect a big mover today, but that's kind of what we're looking at as far as news releases go. Now, this week, and again, going into Wednesday, I always want to go a little bit ahead. Tomorrow is your crude oil number. So if you are a crude trader, again, crude oil has been absolutely all over the place. If you guys look at kind of some of its pieces here, miraculously enough, what did we have last week? We had 5% of the world's production shut down, and yet we had an addition of 1.1 million barrels, right? So kind of crazy that there we actually gained supply in a week that the producers were not producing. So we'll see. You can see that they are not very correct in oil. If you guys are not looking at oil because you feel that commodities is the scary asset class, if we were talking about futures, I would say, yeah, you're absolutely right. Oil futures are an absolutely just crazy world. You can lose a lot of money fast if you don't know what you're doing over there. But in Nadex, it's no different than if you guys were trading indices or Forex or anything else. So it's a great environment if you guys are not accustomed to it. Your strategy should work on oil charts just as well. But again, oil is kind of the big release for Wednesday morning. Don't forget on Thursday, President Draghi is speaking. Okay, this will probably send the euro and potentially the pound as well in multiple different directions. As you guys know, you can trade the euro yen or the euro dollar with Nadex or even the euro pound. So definitely some things that we can trade as well as BOE speaking. Okay, Carney speaking as well. So could be fun. Okay, Thursday morning, again, we have 8:30, 9:30, 9:45. So it looks like it's going to be an action-packed morning with potential for some pretty nice moves. Okay, and then again, final GDP I mentioned is there. Going into Friday, all we have is core durable goods. So and personal spending, but they are at the same time at 8:30. So again, be cautious of that one. It is before the overall market, but that could really set us off for what the Friday trend is going to be because there's nothing after that. There's no talks, no nothing. So just be cautious of that going into Friday. Okay. Overall, I would say, again, this week is light on news. We kind of have one release a day. Last week was amazing. This week is kind of like, it is what it is. But again, be cautious of that, okay? So you don't expect, as many movers as what we had. So with that being said, let's jump over into charts, okay? All right, so, whoops, hold on. I got to bring the right window up so I can switch between charts. There we go. All right. Yesterday, we talked about being in an interesting situation. Again, we had bounced off this higher time frame supply zone, basically meaning a selling zone. And we watched price last week kind of drop down, right? We went from here on Friday. Here was our gap. And again, Monday was just kind of Monday. Now, we were basing at this level. We did break a little bit lower. The gap was never really full back from kind of this area back from September 3rd. So as we're coming across, we see that we did have some green, right? Looking at the lower time frame, this was actually a pretty healthy recovery, kind of retracement back up again. And again, you guys can see, it's a very kind of impulse correction. So it did put the work in before it kind of got turned around, and it got turned around at kind of a predictable level. Okay, let's grab the rectangle. You guys can see this is where price really pushed to the downside, right? We had some basing, and then we had the push to the down. And again, this is price action 101 here. Price came up, hit it, and has now kind of moved sideways. What I'm looking for in this pair is kind of the overall picture, looking at the larger time frame. You guys can see, if you see this arrow and this square, this is what's considered a downtrend setup. Okay, we've had a large push. Obviously, we've had a trend reversal off an area of sellers, and now we're pulling back to grab some more orders. It has pulled back, and again, it found an area on the 4-hour. And in fact, you guys can see this little wick over wick. It's actually grabbed an area on the daily as well. So for this pair, I am definitely in a kind of bearish mindset. I'm looking for entries. And if we start to get many more, I'm not a huge fan of this kind of wick pushing up, but I understand that it pushed up into a sell zone. So there was actually a trigger up in the 73.30 area to be able to take this short. And again, looking for profit targets. Longer term, down here in the 71 kind of 70 area back at the initiation of this last pop. Okay, but shorter term, probably about, again, it could be down in the 71.40 area. So again, more or less down here, about 100 pips south of where we are. With no news, though, this is going to probably grind out a little bit. So just be cautious about that. One thing I always warn people about in Nadex is one thing that people don't always think about when they're putting on the correct Nadex position is what the expiration is. Using the ATR. You guys can see up here in the upper left-hand corner. I believe you guys can see this. You guys would see it says the ATR, 100% of the ATR is 63. Basically, 64 pips is what this should do in a day. Okay. If we're talking about a target down here that's over 100 pips away, that's going to take probably 2 days for us to be able to hit down there. Okay, if there's not another retest on the way down. So you need to be very cautious in the strikes that you're using, particularly if you're using the daily 4-hour and 30-minute. So today I'm near-term bearish, particularly bounce off of the zone, although the entry would have already occurred a bit ago. Again, targets on the near term, again, I would put them probably down here at the 70, probably 72.60, about 50 pips from where we are. They can absolutely cover that in a day if we need to, okay? And that's based off of its daily averages, all right? Looking across at Aussie dollar, as that loads, I'm going to grab a quick swig of coffee. You guys can see almost the same exact pattern, right? Off the daily, again, we talked about this, we talked about it last week. We ran into the same level of basing, hit, drop, okay? Now, at the bottom, we mentioned this. We had a little bit of a gap, going into the weekend. We wanted to see what it was able to do. And if you guys look over here on the 30-minute chart, you can see that its reaction off of the gap, it popped up and then really just kind of hovered, right? It went a little bit above, a little bit below, a little bit below, a little bit above, a little bit below, a little bit above, and then finally pushed its way out. But where did it push itself out to? Into an area where, prices had kind of tickled this area before and then pushed back down again. Okay, I can do the same thing and mark off areas of basing, and there's your area of basing right there. Okay, we hit here, and again, super close before we're flipped around. So almost the identical pattern between these two pairs. Again, same thing, downtrend setup. This one is farther down the run though, and again, a target for me in this one would be 67.25. Right, same thing. Start of kind of the candle behind the green, kind of push up. So still bearish. This one looks like in this 30-minute, it's starting to put in kind of a reversal. If we get a break below 67.88, that would give me what I would call a color change with a red, green, and then a red push down. I would prefer if it was actually breaking kind of zones here. Okay, one tool I do use is this oscillator, which is helping me see where levels of supply and demand are broken. I'd like it better if it was breaking 2 of these on the downside, but by the way that it kind of popped up, it's unfortunately not going to do that. So again, bearish in this pair. When we get closer to the news today, I may be looking at this one inside of a 2-hour binary position, just because with the strike being smaller, the strike differential between, the strikes they're much smaller. It gives us a better, a kind of a better way to, I guess better odds at, having a position move, but move enough for us to become, a profitable position, if that makes sense. My feeling is after we get the initial spike and maybe slight retest, I don't think this pair is going to move a ton today, so I'd be a little bit more cautious using a daily strike for it. You can use it with spreads too. Again, they do have 2 hours for those, so that's another option. That gives you the ability of not having to be, fully, 100% or nothing. Obviously, you gain as it goes down because it more closely follows the underlying asset. So that, again, that's another option today too. Around 10 a.m., the consumer confidence number. Let's see what happens when U.S. traders come online in about the next hour. See if we can get some movement in this one. Dropping over, let's look at Euro Pound. As I mentioned, Euro Pound I think will be an important one later in the week. One area that I mentioned before is we're kind of flaunting with this kind of bottom section here. And a lot of that, you guys can see, here's where price is currently. And if we go back, you guys can see that's the last time we really had any basing. And now we're entering this big kind of upward kind of grind, right? I mean, I wouldn't say this is not an explosive move. Each day it had wicks on the top and the bottom and a body kind of encompassed by them. So it was a slow grind to the top side. And we talked about we needed to get through kind of this area, right? These 2 bars. And you can see those 2 bars were formed back here with the way the price is basing, popping, and then retesting and really kind of hitting this kind of red area. The yellow is more of the caution area because, again, it did bounce, but this last piece right here actually kind of started to mess with this base, all right? Looking below, there is a little bit of a zone here, a little tiny one here, but the last really strong one would be this section down here at 87.31. So going all the way across, we'll go back to here. That's kind of where we're flaunting with, is really pushing down lower and kind of messing with these two. So we are at what I would call somewhat of a low, right? I mean, it's been a long time since price has been back here. You can see this is, again, price was driving down. We had this green pullback. It was a downtrend setup, and it's pushing back down again now. It's continuing, but it hasn't cleared the lows yet. And once it starts clearing the lows, I'd be a little bit more apt to get into a position. Right now, I'm just using this to show me that it looks like the pound is still continuing to have strength, and the euro is continuing to have weakness. So in looking at setting up a pair, or looking up, setting up a position, whether in the euro dollar or the pound dollar for consumer confidence, I'm going to be looking at this one to say, hey, listen, the euro is weak and the pound is strong. So if it's a dollar weakness move that I'm seeing, and what the reaction is to consumer confidence, I'm going to play the pound dollar today. If it's a strong dollar move based off consumer confidence, I'm going to play the weaker of these two, which is obviously the yen. I'm sorry, not the yen, the euro. Okay, so that's how I'm going to use this pair today. Until it clears this level, I'm not looking for a position in the euro pound, but a lot of it's going to depend on that consumer confidence number. Now, looking at euro yen. Euro yen I'm very interested in this week just because with Draghi speaking, there's not many purely European-based news releases. A lot of them are by proxy through Germany or through France. When he speaks, that's actually something that is directly talking about the euro as a whole. So, important area that I'm looking at, Ken, you guys can see same kind of situation that we had with Europe, the Aussie. Price had driven up, it kind of went back down again. Now, this one kind of missed it. It didn't quite go as far as it really needed to, but I am looking at this zone right here. I'll just drag this down. It's easy. It's right there for the sake of time. As far as the 4-hour zone goes, I'm looking at this zone here from 118.65 up to 118.78. That was the last time that price pulled back, and then the reaction off of that area. Sellers came in and really just hammered this thing straight back down again. And again, that's on a 4-hour. You guys can see, even on the 30-minute, it got hammered pretty far to the downside. Bit of a gap in there. It was such a strong kind of move. And again, that was at 3. That was the 3, and this was the German and the French flash manufacturing PMI. Okay, not a bad area, right? Well, it's doing exactly what you expect it to do when you see a parabolic move like this. Anytime you see a parabolic move, you are looking for a retracement. Now, it is taking a while to retrace. Just FYI, it's taken over 24 hours, and we're still not quite back up there. But because it was such a large bit of movement, so much power coming back down again, if price is able to get back up into that area, I mean, we're talking about what, 65 to 78. We're talking about 11 pips. It's a very small area, especially on a 4-hour time frame. Great potential setup. The risk of reward is good in that area. I'm going to be looking for potential shorts depending on what's happening. Ideally, it will push its way up into that zone right before news. That would be the ideal situation, but we'll have to see if it's able to kind of grind its way up there. Again, it's doing it slowly, and again, this is the warning that I give people. Don't forget, I mean, I absolutely love Nadex without a doubt. The one thing that can get you in a slow-moving market like we've had recently is those expirations. Okay, so you do have to understand your expirations. And again, maybe these time frames are too big for the time frames that you have allotted. Maybe you should drop these down and look at those and again, use the 2 hours. I love the 2 hours. A lot of my students love the 2 hours just because we need smaller movement. Okay, and again, in a grinding market like this, sometimes it makes sense. All right, but again, if we can get up into this area, again, I'm looking for potential shorts. Euro dollar. As I mentioned before, I told you guys my secret just a second ago, how I use the euro pound to determine whether I should trade the euro dollar or the pound dollar because they will be mirrors. I'll tell you right now, in looking at this pair, looking at this one on the daily, this is very, very difficult to read. I mean, what's the trend here, right? I mean, it's just whippy back and forth, up and down and up and down. We're still stuck, right? You guys can see on the lower time frame as well, pop up and down. Here's 4 hour. Look at this. What is the trend in this area? Here, I'll try to make it really impressive looking. Stretch it out. What is the trend here? I have no idea, right? It's basically sideways. There is no trend. Okay. Now again, unless you are just selling time premium, a sideways market is not the best one to trade. There are better opportunities out there where the markets are moving, even if it's slightly. This one really hasn't done much. It retraced back up as of 8:30 yesterday morning. It hasn't moved. It's been stuck inside of the same, basically 10 pip range. Boring. It's absolutely boring. Okay, so this is a pair that I don't really have anything set up. Area, again, it does have a similar area up top that I'm looking for. I do like this zone, and again, this is how I use technology, guys. I do like the pop. I do like how this was kind of, pushed to the downside. So again, if price comes up to 110.15, I will be potentially looking for a short. I say potentially because I got to see how it gets up to that area. Did it do a very, very slow, laborious grind? Maybe I will not be as interested. But if it pops up with a news burst, then absolutely I'm interested. Again, we're going from 110.15 to 110.25, basically 10 pips. Again, 10 pips on a 4 hour chart, not a bad zone. The ATR is about 64, right? In a 24 hour period of time, it should move about 64 pips. That's what its average is right now. So not a bad little setup on that one if we were able to get up into that zone. Dropping across, let's look at pound yen. Okay, so pound yen, similar scenario. Again, we talked about this one yesterday morning, that it was bouncing off a kind of a lower frame, right? We saw it hit the daily. It dropped to the downside, and we were a little bit cautious saying, okay, we're here. It's got to break below. If you guys remember, I said put this alert down here at 133.35. If it breaks below that, I'd be interested in looking at some type of a short position. Well, guess what? It didn't break below. Okay, so I didn't need to track this one all day because I was looking for it to come to the downside. Now, what did it do instead? It went sideways, 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 and then early this morning, it finally popped based off of news, went all the way back up, grabbed the orders, didn't quite make it all the way up though, and now it's kind of stuck in the middle, right? So for me, again, actually, I think we were over in this area yesterday. We were right, yeah, we're right here, and we talked about, hey, there's this blue line. If it breaks this alert area, come back to it, and it did. You could have spent all day in this trade, and again, really, if you would have put any position on, most likely it would have expired worthless on you, right? You would have expired out unless you were already in the money because, again, it did move, right, until this morning. And again, that's what can happen with this pair, unfortunately. Its ATR is actually, it says 137, but it's because we have some of these big candles in here. It did nothing. It kind of looked like the Euro chart did for a while. Overall, I am still bearish this position, but I needed to break through this level of demand down here. Again, the alert is still valid. The alert has not pulled itself off. When price comes down and it breaks, I will be triggered. I will get an email, and then I will come back and look at this chart. But you guys can see this spike here is just grabbing orders from this push down. Like I've talked about in the last two charts, kind of the same idea, right? Now you're talking about grabbing things in that level. And what did it do? It popped up, it hit it, and then kind of retraced back down again. So same setup from the last two. This one just did it a little bit ahead of time. This one should be doing a lot more movement. Again, having an ATR of 137, you guys can see on that Forex factory chart that I kind of pulled in, right? It's at 64. Okay, it's moved 64 pips total in 24 hours, and it should be moving 137. So it's doing less than 50% of what it should a day. Okay, that's why I'm saying it's a slow market right now for that. Looking at the pound dollar, again, pound dollar, very similar. This one yesterday morning, we talked about we were sitting in a zone right here. And again, if it broke below, we'd be interested in it. But again, what did it do? It basically banked right off that level. We had buyers and pushed up. And again, what did it do? It grabbed the orders from here and started to push back down again. You guys can see this candle, and again, I'll stretch this out for you. Look at these two candles. Spike up, push all the way back down again in just these two. Hopefully you guys can see it with the gray on that one. That goes from here. I'll measure this entire piece here for you guys. Here all the way down to here. You're looking at about 56 pips in less than an hour. Okay. Now let me, you know what? I'll do this just in case you guys can't see it. I want to make sure you guys can see this this move. So there's the high, and the low spike was down to there. Okay. So from here to here, off of this 4-hour level. And again, that was news based. So had you been watching this for news, this is why it's so important. Like, a lot of people don't understand how price action works. The biggest thing about price action reading and understanding supply and demand is understanding where there are buyers and sellers. You know, the goal is not to get in and say, okay, I'm punching my time clock, I'm going to trade right now. What can I buy or sell? It's, if price comes to this area, it's a high probability place to sell or buy, and vice versa. In this case, it was a high probability. Again, 50 pips in less than 2 hours. Actually, this was in less than an hour. So had you taken it, you know, something like a 2-hour binary where the strike prices are, say, 7 pips apart, you just move, you know, I mean, you do the math on that one, right? You move 7 strike prices down. That's how you take advantage of news moves, but you got to understand where the kind of buying and selling areas are. So, you know, that's this one right now. Again, we are approaching that area again. It is trying to grind back up again. Again, if it's sitting in there for the consumer confidence number, that would say something to me. Again, that we're sitting in an area of, you know, sellers going into news. A lot of time, that's a very common situation that you have when news comes out. It shoots away from, you know, where the supplier demand is. That's something that obviously I'm going to be looking at. It's got to travel. What, we're at 24.70. It's got to go up about 10-15 pips in the next 2 hours. Yeah, 2 hours. It's entirely possible. Its ATR on the 30-minute is about 15 pips. Now, again, a lot of that is also supplemented by these large kind of spikes. But it can get up into this area. Again, just something to look for this morning. Looking across over at dollar CAD. Let that one load up. So, dollar CAD. This one we're doing. So I was like, wait a second, this is not a zone. Yeah, remember we drew this yesterday? This is the basically the channeling that's going back and forth between the highs and the lows here. So we kind of hung out near the lows. We did kind of break out of it just slightly and then pulled right back into it. Looking at this one on daily, again, this one is a mess. You know, what do we have here? I mean, look at this. We have 2 days where the bodies are basically just barely blips of color. Big wicks up top, little wicks at the bottom. I do like that today, at least the body is actually a bit more full. It is pushing to the downside. Again, we are dealing with this kind of sawtoothing over here. We're back to the gap area. Here's where we were Friday. It came down and hit it. It went back up, went down again. This is the channeling that we talked about. And we're right back at the Friday gap. So nothing is, I mean, it's funny. Here's where price is right now, and here's where we're on Friday. So there is no trend in this one. This one is purely going sideways right now. A lack of Canadian news is what's causing this a little bit of problem. But tomorrow morning for oil, we probably will see a bit of movement on this one. Finally, this one will come to life. As you guys know, dollar CAD is a bit of a proxy for oil. You can use CAD yen as well, but that's not a Nadex tradable pair. Right now, I would say I'm still short biased. I'm definitely a bear in this one. And the reason why is because you're not hearing a lot of bad news out of Canada. If anything else happens with oil, or there's an increase in oil, again, that would be good for the Canadian economy. But the one thing is too, the lack of news means that nothing bad can come out. Okay, the U.S. does have news, and if the U.S. has bad data, like something like bad consumer confidence data, that can give us dollar weakness. So sometimes not having news is actually to your advantage. Okay, and that's kind of what I kind of see in this one, is having no news helps them. Bad news with a dollar, bam, this thing comes back down again. And again, we're at 132, 50-ish right now. I could see it coming down to 132 flat and potentially even lower with that bad news. And again, this isn't really a great area. This was from something else. Trying to see where we get a spike down to on this one. Probably this area right here. If I had to pick something, most likely this area right here is what I'm thinking that price will spike down to. And again, that's right down at the 132 is right below. You guys can see it right here. Okay, it's right below this level. And again, just because that's where the gap is, the last time we've seen any red candles is really over in this area, right at the 132. So I'm thinking that's probably about 50 pips down is most likely where the downside target would be. Upside's a little harder to tell. Again, on the daily, what do we got here? You know, there's just so much. Lack of a better word, there's drama up top, right? Look at dollar Swiss. Dollar Swiss is somewhat in a similar situation. Again, this one it turned off this very, this peak up top, missed the entry on it by a bit. There was our entry. It kind of came and just slightly missed it again. This was the last pop through. And again, we were looking for this for kind of a breakout, and we just didn't really get the breakout. So it is retracing back down. It is, somewhat of a healthy retrace. Kind of things that I'm worried about is this is where the start of the move. This is where price gap down to. So this right here, again, I'm looking for a level, some type of resistance, right? With price going down, the price gap to there and then immediately shot back up again, meaning that there are buyers in that area. There's something special about that range from 89.80 to 89.60. We're getting very, very close. We're at 89.86 right now. So I want to see what the reaction is off of that area before we look to go short. The problem for me on this one is this one tends to have days where you have a big spike and then it just goes flat. Okay, the ATR is 59, but it's kind of deceiving. As you guys can see on the 30-minute, it's basically sideways, right? I mean, it's grinding lower, but it's not very fast. And again, I worry about expiration for this pair a lot. It just doesn't, you get a big burst like this, but then it just kind of goes back and forth in a very small window. And we just don't get the retracements as much. So in the current environment, not as interested about this one. Last but not least, let's look at the dollar yen. All right, so dollar yen, we talked about this as well. This one went off the higher time frame supply zone. Pretty nice zone, right? Very large move it off. It came up, it touched it. You guys can see it was very, very close, right? And then started to kind of push its way back down. Okay. The one thing that I was worried about is the area, kind of what we just entered and kind of bounced off of. This was the prior area of kind of supply, right? Price hit it, pushed away, and then we launched through, came back and retested in a momentum breakout. It hit it, went all the way up again. This was one of those kind of short-term pieces, right? It retested it, hit, went up, hit ran into the sellers up top, and then price was forced back down again. And again, the old area here became the profit target. So yes, the trade is out. We are out of it at this point. Yesterday morning, I believe, again, here's where we are right now, 8:30. Here's where we were yesterday, and we talked about this. This is that kind of hidden zone that we had sitting there. Right here is where we were. What did it do? It hit it, went all the way back down, and went right to the profit target that we talked about. If you guys remember, we said at the start of the move, this is where the price popped off of. That's where your target was. It hit that target, came up again, came and gave you a second ability to get into it. And then finally, obviously on the third strike, it pushed through and went higher. Where we are now on this one, again, as you guys can see, we are wedged between this top side and this bottom piece here. We did have a big push down, and we're getting a bit of a retest right now. Question is it looking for orders to make another temp down? I think that could potentially be the case. Like I said, the consumer confidence number is picked to be lower than it was last time we did the reading. And if that's continued to be bad, again, this pair follows the overall stock market, we could get the push. And again, the down, the retest to grab some more orders, and then the push lower. Okay. Now, just be cautious to the downside. 106.90 is showing me that we got a little bit of buyers there, and we got a little bit of buyers down here at 106.12. All right. We'll see what it's able to do. Like I said, it's putting in some, a nice push, a little base, and a nice push again. If we clear this area, we could be in for, again, a run back down into kind of this 107, obviously the 107.50-ish area, but it's already starting to you'll see it's starting to break through now. So again, I would say if we can break through this zone, break below 107.27, I'm definitely a bit bearish, more bearish. I'd be looking for positions at that time. All right. So with that being said, guys, it is 8:04. Watch that consumer confidence number today. We may have about an hour movement after that. And then I think things are going to kind of get a little stagnant today. Going into oil, if you guys are not trading oil, definitely give it oil a try. Use the same strategies. Again, I use supply and demand for it, whatever you're using. Try it out with oil. It's definitely a fun asset class to trade, and we've gotten some nice movement off of it in recent weeks. All right, so I will touch base with you guys next week. I will see you for the Monday morning market breakdown. If not, I'll catch you on Tuesday. You guys take care, and good trading.